Hi, today we are going to go through the implementation of the GST for the companies in India. Basically, from 1st of July, we will implement the GST for Indian companies. So this is the first session for the GST India for Office Central. During this session, we are only going to go through the introduction about the GST India. So the first thing, the one that you will learn will be some of the GST terms like the input tax. Input tax is when you purchase product from your supplier and you are going to pay the GST. That is the input tax. This input tax you will claim from the government when you submit your tax return. For example, for July, you will submit your tax return in August at the middle of the month. So when you purchase something and your supplier charge you the GST tax, that is called the input tax. And then the other one is the output tax. Output tax is when you sell your product to your customer, you are going to charge the GST on top of the product. For example, when you sell at 1,000 rupee and your GST is 20%, for example, then you are going to charge product 1,000 rupee, and then you have 200 rupee for your output tax. This output tax you must pay to the government. So the output tax minus the input tax will be the net tax, the one that you will pay to the government. In India, there are two type of the GST in the India GST. One is central GST, and the other one is the state GST. And central GST is the GST tax that we pay to the central. And then the state GST is the GST tax that we pay to the states. There are various states in India. And if you are doing business from one state to another state, then you'll pay the integrated GST or IGST. Of course, then if you haven't registered your company as a GST company, then you will go to our website, officecentral.co.india, for the procedure to register a GST company. And by now, I believe most of you are already registered GST company in India. And then if you want to look at the threshold of the registration of GST company, for most of the companies, it will be 20 lakhs rupee, except for the northeastern states, the threshold is 10 lakhs. So, but even though you have not over the threshold, means that your sales is less than 20 lakh, but if you are this kind of entity, for example, I've shown it at the back, at the bottom of the PowerPoint, you know, the casual taxable person or business. If your business is engaged in the interstate supply of goods and services, you must register as a GST company. And the rest of the thing, for example, you can read at the bottom there. But basically simple. If you are having an interstate business, then you must register as a GST company. Okay, what is the tax rate for the GST? Actually, during this webinar, we still do not have the decision on what is the tax rate for the central GST, what is the tax rate for the various states in India, and of course the IGST is actually a combination of CGST and SGST. GST. And so we will wait until the announcement of the government on the central and state GST. But the GST may be different. For example, you can see that the essential item may be 0%, common use item may be 5%, standard rate maybe 12%, and there are some standard rate like 18%, and high tax item 28%, and luxury goods and demerit goods 20%. But we will wait for the government announcement for the various tax rate. But at least the software are ready to handle these various tax rate. Okay, this is the expected date for the GST in India, and basically we will wait until the government official announcement whether the 1st July is on or not. But we expect it will start 1st of July. After the GST is launched, the previous taxes will be replaced by the GST. You know, you have this central VAT, central excise duty, service tax, additional custom duty, special additional duty on customs, central tax, central sales tax, central surcharge, and cess, and all that will be removed when the GST is launched. And then state tax will also be removed. For example, state VAT, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting, and gambling, state cesses and surcharges, entertainment tax, and then the central sales tax. So all these tax will be removed when the GST is started. So I've given you another page for the summary of the various taxes, the one that will be removed when the GST comes in. Like under the central, you have excise duty, service tax, customs duty, central tax, central sales tax. For the states, for example, you have VAT, you have entry tax, luxury tax, entertainment tax. But the one that will stay after the GST will be the municipal tax, the octroi tax, and the local body tax. This one will stay. Okay, what is the GST? I mean, we go back to the theory of the GST. GST is the value added tax levied at the all points in the supply chain, with credit allowed for any tax paid on input acquired for use in making the supply. It would apply to both goods and services in a comprehensive manner, with exemption restricted to a minimum. Basically, in India, for example, you actually have two taxes. One is central GST, another one is the state GST. And the GST is making use of the destination principle. For example, let's say integrated tax, correct? What are the tax, the one that you are going to charge for that product? For example, when you sell certain product to another state, for example, the GST for the state GST is the GST of the destination stage. So then the GST will be the CGST plus the state GST of the destination state. So of course, the union territory, you will treat it as another state. So, but if you are doing export, then it is a zero GST. So if you are doing import, since you are using the destination principle, the GST will be the state GST where you are importing that goods. Of course, some of you will ask about what is the benefit of the GST on all this. If you go to the government website, you actually can see a lot of write-up on the various benefit of the GST. I'll mention some of this here. For example, he has a wider tax base, and then probably lowering the tax rates, and then elimination of some classification disputes. And also it will eliminate the multiplicity of taxes and their cascading effect, like what happened now. And then it will rationalization of the tax structure and simplification of the compliance procedures, and harmonization of the center and state tax administration, which would reduce the complication, duplication, and compliance costs. And then in the GST, there's also automation of compliance procedures to reduce errors and increase efficiency. You learn about how the GSTN later on will help you to do a lot of this automation in calculation of the various GST submission. Okay, I just give you a very simple example of the GST. So if you are, for example, in Tamil Nadu, so if you buy the product within the state, then it will be you just pay the central GST and state GST. But if you are buying product from another state, any state from across India, then you need to pay the IGST. And remember that about the destination principle, right? If you are buying from another state, the destination is your own state. So the GST is your state GST. But if you are selling to another state, then the state GST is the GST of the state you are selling your product. So the IGST is the central GST plus the state GST. So you will notice that when you run your GST software later on, you actually have a selection called zero rated GST. Zero rated means that the product is covered by GST, but zero rated. The good thing about zero rated is even though you don't charge GST to your customer, but you actually can claim the input tax from the government. So that is the zero rated GST. When you sell zero GST, you just set zero rated, but then you can still claim the input tax. GST exempt means that you don't charge GST to your customer. At the same time, you also cannot claim GST from the government. It means that is the GST exempt. Normally, this is for the food item. A lot of the food items are exempted from the GST. Like, okay, so this is some example of the definition of the input tax and output tax. So if you buy from somebody else, whether it's raw material, rent, electricity, or furniture, or services, or anything, and they will charge you the GST, right? So that is your input tax. And then when you sell something, goods and services, and you charge GST for it, that is the output tax. And I've given you this, the flow of the GST, the concept of when you sell your product, you charge the GST, but you can claim the input tax when you purchase your product. So the total tax that you pay to the government is the GST, the one that you collect on your output tax. You minus the GST, the one that you pay when you purchase the product. So the net GST is actually only the GST for the value add during your stage. So it will stop from. I mean, you don't charge GST on top of GST. So if you go through that list, you will see that because you can claim back, the GST is only for the value added services at your stage. So if you export your product, actually it is zero rated. So you don't have to add GST for your export, yet you can claim your GST input tax. So there is also another special on the export of product. You can still claim your input taxes. If you input your product, let's say you import your product, import of goods. So the government will ask you to pay the GST at the custom point, at the import point. So you pay the GST at that point, and then you claim your GST in your report as the input tax. So, but if you import services, services actually can go through without customs, correct? So you just go to the system and do the transaction for import of services, and then you pay to the government under the GSTR3 report later on. So this is a little bit special for the import of services, the transaction. So of course, during the GST, you will see that you need to do a lot of the review for your supplier, for example, because of the some supplier will be GST, some supplier will not GST. Look at your sales and contract, review your cash flow. Basically, you are going to have some issue in the cash flow, I think. Review your credit term, and then implication on invoicing. Every time you invoice, you need to pay the GST. Implication on the bad debt. Implication on input tax. Implication on look at your human resource, and look at your accounting system. Your accounting system must comply to the GST system. So when you want to look at the implementation of the GST inside your company, you need to look at the accounting system. So in the next session, we are going to go through the accounting system. How do you implement GST in your accounting system? So we are going to stop here during this session, and we are going to go to the next session with the actual sample of the how you do your GST using accounting system. So after this, we are going to go through your various question during this session, and I'll start the broadcast first. See you in the next session.